Welcome, ladies and gentlemen. Thank you so much for tuning in today. Today we have Ms. Monique Jiang, co-founder and senior credit analyst at QA Finance Private Limited. Now, QA Finance and Jalen Realty has been working through several years together, and we work very well because we believe that we are able to leverage each other's skills to the maximum to help you, our potential buyers and buyers, to not just locate, but source the best financial product to help you with your purchases here in Australia. So with regard to Brunswick Yard, we've been talking about, and if you're interested in buying off the plan, we have Monique Jiang today to share with us how you are able to do so and what are the challenges and issues faced with buyers wanting to buy off the plan, particularly overseas buyers. So without further ado, please help me welcome Monique Jiang. Hi, Monique. How are you?
Good, thank you. How about you, Ernest?
Very good. Thank you. So where I am, it's been very bright and sunny, but not warm. It's bright and sunny and cold, but at least it's not raining. What about your side?
Yeah, so finally we have a few dry days, but apparently Melbourne is pretty cold until now. But right now, today, it's also very sunny. Lucky day.
Fantastic. So, ladies and gentlemen, without further ado, I know Monique has done a fantastic deck where she'll share how you as a foreign buyer is able to leverage the service and skills of a broker to find the best possible package. So Monique, I'm just going to turn on the screen share and I'll let you take the presentation along, yeah?
Sure.
All right, Monique, away you go.
Okay, so today, thank you for having me with Ernest together to have this webinar. So this webinar, we are planning to talk about how to help foreign buyers to secure the right mortgage to purchase a property in Australia. There will be two major parts of topics in our webinar. So next slide, please. So once again, just now, we also mentioned I'm Monique Jiang and I have my own broker firm with my business partner. I've been working as a mortgage broker for more than 4 years. So within the past 4 years, I have helped lots of overseas buyers and also local purchasers to get their finance sorted. I've seen the ups and downs of the real estate markets and also the finance markets. Right now, I know that many overseas investors started to plan to invest their properties in Australia, and I'm happy to help. After this webinar, you are always welcome to come back to me and contact me via email or mobile phone regarding your scenario and get your finance sorted based on your customized scenarios.
Well, Monique, I'm sorry to interject, but you also do refinancing, right? So people can still connect you for refinancing. Okay.
Yeah, refinancing, equity release, if you've got a debt-free property as well. With legit cash out purpose, I can always do that for clients. So there are two major parts in our webinar today. The first part, I'm going to talk about some mortgage climates in Victoria for the past few months or for the past 1 year. And the second part would be the lender selections and policies, and most importantly, the procedures and processes, what you should focus and emphasize regarding a loan solution. So next slide, please. Okay, so it's regarding the mortgage climate in Victoria particular, not only in the whole Australia. There are a few major parts that can be called the driving force of the supply and demand in today's market. Next slide, please. So there will be strong demand we can foresee in the very near future regarding the mortgage climate in Victoria, also the real estate market. The first of all would be the cancellation or the stop of the COVID restrictions in Australia. So the Australia Prime Minister finally put an end to all the COVID-19 restrictions in October the 14th. So no one needs to self-isolate even though they got COVID-19 after 14th of October, and right now not even asking people to put their masks on airplanes or on public transports. So with this cancellation of all the COVID restrictions, we believe it's actually happening as well. We believe many overseas students and also workers and tourists are coming back to Australia and gain their confidence again. Because in the past, especially in Melbourne, the lockdown policy was once like very strict in the country, and most people are discouraged and try to move out even. So which is why in the past 1 to 2 years, Melbourne have seen a decrease of population, but things have changed a lot since this year, and especially from October, we believe like the population in Melbourne will be increased very soon. And the second part is the welcoming immigration policy for financial year 2022 to 2023. We have seen that the Australian government is issuing more welcoming immigration policies for skilled migration. In the past, places for skilled migration is around 160,000. But right now it's been increasing to 195,000. So it's totally foreseeable that more international students will come back and choose Australia and even Melbourne as their preferred destination for higher education study and try to gain their pass to get their permanent residency. And the other part that will encourage international students to stay on after graduation is a longer working visa, because Australian government is trying to put working visa for graduation students from 2 years to 4 years for bachelor degree, and from 3 years to 5 years to master degree students. So we believe in this case, like even though if you are just like studying and working for a short period of time, like people will be more willing to stay in Australia because they can have like longer working visa. And these two driving forces can let us to the next topic, would be the lack of new supply of inner city Melbourne. Because the other point is that with this welcoming immigration policy and with the reopening of border, we'll see more people trying to invest in Australia or even Melbourne for brand new apartments or other kinds of properties. And also people are more willing to live in the nearby suburbs or the CBD areas for the convenience. So with right now, we can see in inner city Melbourne, there are not many new apartment projects occurring in the near future. And just because I believe like some of our audience would notice how tiny it is, our CBD area. So with like definitely not enough block of lands, like we can totally foresee in the future there won't be enough places to build new apartments, so which will lead to a lack of supply. And with this lack of supplies, it's actually happening now. We can see the residential vacancy rates has been deeply decreased starting from this year. So as I mentioned just now, like within the past 2 years, just because of the very strict lockdown policy in Australia, in Victoria, actually, people are discouraged to live in Melbourne CBD areas or even in the whole Victoria. People move out a lot. So actually in 2020, we can see the vacancy rate has been increased a lot to up to actually 4.7% in 1st of December 2020. But this vacancy rate has been decreased a lot by 1st of September 2022 to only 1.6%. So we normally categorize a vacancy rate below 2% as landlord's market, and 2 to 3% is like a neutral market, and above 3%, we will believe that is the tenants market. So right now, we totally believe these low vacancy rates lead to a landlord's market, and it's actually happening. So next slide, please. So with this low vacancy rate, of course, we can see a huge increase of weekly rent expense for tenants, both houses and also units. We can see that the demand, as I mentioned just now, the demand are majorly from international students, tourists, and also international workers, like workers coming from other countries, but for sure local workers as well, because after the COVID policy is cancelled or paused, right now most companies have started to request their employees to come back to the office to work. So in the past few years, people move out for bigger areas because they can work from home. Right now, they are sort of like still have to move back to Melbourne CBD or nearby suburbs so they can save time for commuting every day and for convenience as well. So this all lead to the higher weekly rental expense. Apart from the limited supply, we can see for all houses in Melbourne, the rent has been increased by 10.7% for the past 12 months. And with units, for all units, the increasing percentage is 21.5% in the past 12 months. That's a huge increase. So there are also other driving force for this mortgage climate as well. Next slide, please. So first of all, I believe it's happening in the whole world, not only in Australia, would be the inflation risk. So with the inflation risk in European countries and also in America, we believe this would trigger a higher interest rates and higher commodity prices for basically all products, not only properties, but also the construction costs, labor costs as well. With this inflation risk, we believe the house prices will increase in the future, and also interest rates will be increasing. It's actually happening since May this year. So the second driving force in here would be the interest rate. In the last 2 years, because of COVID and also the slow-moving economy, Australia has seen the lowest interest rates for mortgages in their whole history. So 2 years ago, we could see a home loan interest rate as low as 1.78%. It's definitely the lowest in the history. But since May this year, RBA announced constant increase of cash rates. So the cash rate was 0.1% before May, but now up to October, which is this month, the cash rate has been increased to 2.6%. So we can now see for a local client, they used to pay 1.8% interest rate, but now they could be paying 4.5% with just 6 months difference. So because of inflation rates, I can see that many countries are doing this last resort by increasing the cash rates or the interest rates. And it's still happening in the near future because in this year, in Q2 of 2022, the inflation rate of Australia is 6.1%, which is actually much better than other European countries or America. America is actually almost reaching 10% for inflation rate, and in some European country like the UK is 9.1% or something. So Australia is actually doing a little bit better job than other countries. But compared with Q1, the inflation rate was only 5.1%. But right now we're still waiting for the figure for Q3. The inflation rate could still be increasing, which is the reason why I believe RBA will still continue to increase the cash rates in the near future. It is expected, and also in the comment issued by Australia Financial Review, that cash rate might be increased to 3.6%, because right now it's 2.6%, but it's expected to be increased to 3.6% by February next year. So, which is why we can expect our home loan interest rate can be increasing by another 1% within just next quarter. And last but not least, the last driving force would be definitely the federal budget. So apart from the welcoming immigration policy I mentioned just now, there are also federal budgets that's trying to encourage first home buyers to buy their first home as soon as possible. So before, in Australia, the government has already issued the first home loan deposit scheme, enabling first home buyers to purchase their home with as low as only 5% deposit. Right now, they are increasing the available places from 10,000 places to 35,000 places each financial year. They continue to have this first home owners grant, $10,000 if first home buyer purchase like brand new properties or house and land packages with the total contract price no higher than $750,000. So I know this is not relevant to overseas purchases, but we need to bear in mind that for overseas purchases, you can only purchase brand new properties, and also for first home buyers, if they want to make good use the government benefits, they have to purchase brand new properties as well. And with this contract price cap at $750,000, their selections are actually very limited. They are either like apartment buildings or two-bedroom townhouses or house and land packages in more further suburbs. So I would see these are all the driving force that will be carried forward. And there will be like more competitions between the first home buyers and overseas investors if they tend to purchase the same kind of properties. So the next slide, please. So the second part is the mortgage solutions for foreign investors. So first of all, would be the mortgage application 101. I'm not going to elaborate for all the details because this will be too much information for all investors for our audience today. But first question I reckon most foreign investors would like to ask is if you could borrow from a local bank in Australia. So next slide, please. So regarding lender selections for overseas investors, I have to say that local banks in Australia has already stopped granting loans for foreigners since 2017 to 2018. So actually no banks in Australia can grant a loan to foreign investors. If overseas investors would like to apply for this property loan, usually they could only go to financial institutions instead of a bank. So next slide, please. So the next part would be like what would be the estimated fees and costs and what rates they are facing if they would like to apply for a loan. So there will be some standard fees, including valuation fees, like legal fees, settlement fees, and annual package fee. So these fees are not much. Usually it would be ranging from $1,000 to $2,000. Depending on like which financial institutions you are going to. There will be another kind of fee which is much more than this flat fees. Is called risk fees or lender protection fees, because currently with this increasing interest rates, most financial institutions, they have like harder assessment policies to purchasers. If purchasers would like to borrow a higher percentage or a higher loan amount, financial institutions would charge a once-off lender protection fee or risk fee based on your loan amount. So it's actually pending case by case as well. And there will be some financial institutions who doesn't charge a lender protection fee if you only borrow at a certain cap at a certain LVR. So welcome to reach me after this webinar if you would like to know more, but I'm not going to elaborate in here. And regarding long term, usually a standard mortgage long term is 30 years in Australia. There will be a certain parts I talk about in our next topic regarding this long term, because I do have other clients coming from other countries ask me regarding this long term, saying that if they want to make a lump sum repayments on their principal, would they still have this 30-year long term? The answer is like not necessarily. You can certainly pay off your loan much sooner. There will be a certain ways to do so. And luckily in Australia, the interest is calculated in a daily basis. So if you try to pay off your loan in 10 years, you are not paying a 30 years worth of interest. That's very important, because I do know in some countries like Singapore or China, you always pay 30 years of interest if the long term is 30 years. So this is a very different part in Australia's loan, so don't worry about. So regarding interest rate, I'm not sure if our audience have also attended our last webinar as well, because if you were there watching our last webinar too, you'll definitely notice a huge difference regarding this interest rate. It's definitely because of the interest rate increase of RBA I mentioned just now, because from May to now, the interest rate, the cash rate has been increased from 0.1% to 2.6%. So this is the reason why we are having this starting from almost 6% for principal and interest repayment at 65% of LVR, or you can choose a maximum first 5 years of interest only repayment starting from 6.38%, also ranging, also vary among different lenders. For maximum loan amount, this will be pending case by case as well, because this is also, there will be other assessment policies based on your LVR and also the security location. But the maximum loan amounts, you can go up to 2.5 million Australian dollars. So
I just wanted to interject here for a little bit. Aside from these fees, for foreign buyers, when you're buying local properties here in Australia, there's also something that's called FIRB, the Foreign Investment Review Board. You need to have an approval for that. So that fee is about $13,500 or something like that. And then there's also a foreign buyer's tax on top of the stamp duty. Does this loan cover those fees?
Right, so really spot on. So this kind of like third-party costs and also the stamp duty can be included in the loan application. But if you do have other existing properties, investment properties in Australia, if you have some equity with that property, you can actually try to refinance and cash out for the equity to pay this third-party cost. So, but if you are only purchasing this property and you don't have other equity, you can't actually top up loan amounts or increase the LVR just to pay off the third-party cost of stamp duty. But very good question.
Thank you.
And this part I would like to emphasize regarding this offset facility, because I believe not all countries have this offset facility with their loan. In Australia, and even though if you go for financial institutions for this investment property loan, you can still have the offset facility to go with your loan. An offset facility actually means it's a everyday transaction account, but this account has exactly the same annual interest rate, exactly same with your loan. So say your loan interest rate is 6.38. If you choose for interest only repayment for the first 5 years, you can have this offset account having exactly the same interest rate. You can put the additional or sufficient funds and put some savings in this account to offset the interest repayment incurred in your loan. So by this way, you can actually make less repayments each month or reduce the amount of interest. And then you can pay off your loan faster. And you can, because it's an everyday transaction account, you can always have easy access to your money. You can deposit more today and withdraw for some other usage tomorrow with no cost or penalty. But it's only because I just mentioned the in Australian loan, the interest is calculated in a daily basis. So if you try to withdraw money tomorrow, that means you, the loan balance used to calculate your interest will be increased too. But it's a very handy facility. So next slide, please. Okay, so I know this feels a lot of documents that I need to mention about, but I'm not going to elaborate. Just give you some like briefing regarding the documents required for loan application. There are 4 major parts actually. The first of all, we definitely have to present our country ID or your country passport and the credit reports of issued by official institutions in your home country, and your driver license. And the next part will be disclosing your income and liability in your home country. If you are working as a salaried employee, you have to present the bank statements for the past 3 or 6 months to evidence your continuous employment history, and also you receive income in a continuous period. And also, if you have liabilities in overseas in your home country, or if you have existing home loans in Australia, you have to disclose to financial institutions for approval as well. If you are purchasing a property, you have to show the exchange or signed contract of sale, and also a bank statement showing you have sufficient funds to complete purchase. If you are not a salary employee but a self-employed, which means you are operating your own company, there will be more complicated processes and documents you have to provide. You'll have to provide, say, the company tax returns, your company type financials for the past 2 years, and also the company bank statements and your individual bank statements. So always welcome to come back to me, and so we can workshop your scenario together and help you sort it your finance. And also, last but not least, because today we are going to talk about how to help clients to get their finance sorted when they purchase an off-the-plan property. Off the plan means the settlement could be long time from now. In Australia, I'm not sure if it works the same in other countries, but in Australia, if you are purchasing an off-the-plan property, you cannot apply for loan application unless the property is almost completed. So I know in some countries in China, if you purchase off-the-plan, you apply for a loan now, and you started to make loan repayments, even though it's still construction is still going. But in Australia, it's totally different. So you have to wait until there are maybe 2 or 3 months left before property settlement. And at this timing, you start to apply for loan applications. So for now, if you are going to purchase off-the-plan property, but it's going to settle, say, mid next year, it means what you can do right now is to do some research regarding what loan options you have. You can come to me, and I can help you to do the preliminary assessment and find out your borrowing capacity, so you know what to expect by say March next year. If there are 3 months left for property settlement, then we can workshop your scenario again to make sure like nothing huge changes, and your income can still service the loan. And with right now the increasing interest rates, we can expect that in the future it will be a bit harder to get a loan. It means that you have to earn more to borrow just the same amount you did like 6 months ago. So which is why I can give clients advice based on the current situation, and also for some foreseeable scenario, I can give clients some advice as well, like what they can expect. Maybe by mid next year, you are having even high interest rate. If your income will still be enough to service the loan to purchase this off the plan property. So that's basically, oh, right. Last but not least, there will be some parts we have to pay extra attention to when you purchase a property and also apply for loan in Australia. So first of all, because like you apply for conditional approval and get your income verified by financial institutions, but they will still go for a valuation for your security. And the final loan amount and LVR will be decided based on the certified value of the security instead of contract price. So in the past 1 to 2 years, we can see some high density area like Melbourne CBD and nearby suburbs because of the at that time there are like low vacancy rates in those suburbs during COVID-19, and also it's a little bit oversupply thanks to the same reason as well. We can see a very common situation that apartment buildings were undervalued especially in CBD area or nearby suburbs. In the past 3 months, I have to say that this scenario has been becoming better. The valuation has been becoming better as well. And interest rates, as I mentioned just now in quite a length, interest rate is expected to be continue to increase in the near future. Recently, there's been no sign for RBA to stop increasing each month. So we can still expect that interest rate would be increasing in the near future, month by month. Impacts from COVID, as I say, in the past, the valuation has got some issues, apartments tend to get undervalued because of COVID. Right now, it's been improving, but there is some aftermath. So we can expect that the valuation can be still undervalued quite a bit. Maybe will still continue for the next 2 to 3 months. Hopefully by next year, the valuation will become better or can be matching the contract price. Because recently I've done a few CBD brand new apartments valuation. They did come back as contract price as well. And the other thing is what we can do to mitigate this risk. So one good thing is that because overseas investors have to go through financial institutions to get their finance sorted, one good thing is that with financial institutions, you can get to choose your own preferred valuation firms. With local banks, basically, you just can't have that freedom. It's always randomly allocated to a random valuation firm. Sometimes there will be some valuation firms can give particularly good valuation result to a certain apartment buildings. So we've seen that happening quite a bit before. So with financial institutions, we always work very close with the lending manager and also with the developer of the certain apartment buildings before we decide which valuation firms we go to try to give clients the best results. And the other part to mitigate the risk is that I will always recommend clients to come to me to do a conditional approval or at least a preliminary assessment, just to they can have a clear picture regarding how much they can borrow before they make an informed decision.
Monique, I have to just interject here a little bit to just say that as part of the mitigation as well, we always advise our clients to insert a clause that says subject to finance. So that is a good out for them, just in case either they change their minds or if they are unable to secure the correct mortgage to facilitate the purchase. That also helps them with this process.
Yeah, definitely. So that would be a very helpful part to mitigate the risk, just in case they can't get the mortgage they are looking to. But there is only one issue, because if you are purchasing off the plan, sometimes you just can't have that finance clause written on your contract. If it's completely built properties, you can always negotiate with developer or vendor or to set that on the finance clause. But for off the plan, it doesn't always work.
With that, ladies and gentlemen, we've come to the end of Monique's presentation. Now, please reach out to us if you have any questions. I've been feeding her some of the questions that I've been receiving already, and we would love to actually hear from you with regard to the scenarios that you have in your mind. I already have received a few questions, and I will actually bring it up to Monique for her feedback. So, Monique, thank you so much for your presentation. It's been very clear. And I think that at the end of the day, one of the most beautiful aspects about purchasing properties here in Australia is that coming out from the COVID situation, the yields are definitely increasing, as what you said. And I'm very happy to also see and hear and experience as well that the valuations for CBD-based properties are coming closer to the contract price At some point, probably about 6-7 months ago, it used to be at about 5 to 10% discount. Now it's getting closer to the contract price, so that's pretty good. Yeah. Some of the questions we received from the presentation, or while you were doing the presentation just now, actually, I think you covered it already. One that kept coming back is there a difference between a mortgage application process for properties that are actually off the plan and also completed? And I think you already answered that, but could you please remind us again?
Yeah, so once again, if you are purchasing off the plan property, you cannot apply for a loan unless it's almost completed. So you can only wait until 2 to 3 months before the construction is completed, and that's the timing when you can start applying for loan application. Say if you enter into contract today, but the apartment buildings is not fully completed until the end of 2023, that means you sign the contract today and do nothing and wait until September or October next year and start to apply for loan application. So even though I can help clients to calculate their loan capacity and recommend them loan products at the time being, but it's only based on, it's only estimation basis. I can only give them like this general advice based on their current scenario, because things can change a lot within 12 months. Say by September, October next year, interest rates might be totally different. Costs and fees to complete purchase might be totally different. And clients like financial position can be different as well. So if clients needs more information to make the decision whether they should buy the off the plan property or not today, I'm happy to help and provide some insights regarding their loan scenarios, but just for advice basis.
Can I just ask you, does it matter how old the prospective borrower is or prospective purchaser? Because a lot of the foreign buyers may not necessarily be first-time homeowners, so to speak. So therefore, they may not necessarily be 20, 22, 23. But is there like a limit of age?
Yeah, so there is actually not a written rule saying that there will be a cap of applicants' age. They do have to reach at least 18 years old if they want to purchase, or if they want to apply for a loan. There is no cap regarding their age to apply for a loan, but there will be a certain like logical questions, like if an applicant is actually approaching retirement age or has already exceeded retirement age, would they be having like continuous income source to help them service the loan and continue the loan repayment? Say if a client is already retired, not doing the PAYG, I mean salary job already, would he or she be having other passive income? Like if they have other rental properties with no debts in their home countries or in Australia, that can continuously bring them rental incomes to service other loans, or they can have like shares income, or they can be directors or shareholders of a certain company, which they can receive like dividends continuous each year. So this is always pending case by case. Unfortunately, for most financial institutions, I don't think they can accept pension as a valid income source to service the loan. So if we do, because I do have other clients in their 50s or 60s trying to apply for loans in Australia for investment property purpose, we can always workshop and find out the correct solution that's suitable for clients.
Would it be possible then for a parent who is basically the paymaster, because I've got a question here from Mr. Chong, would a parent who is not a PR buy a property, finance the property for the child who is a PR in Australia?
Very good question. So if the children are Australian PR, and they don't have a job currently, and they still want to apply for a loan through local banks, they can't. So if they are PR and they want to apply through a bank, if they don't have any income, they can't. But if they want to use their permanent residency to hold the property and ask their non-permanent resident parents to be income guarantor to apply for the loan through financial institutions, they can. Yeah, so not to local banks. So that means like no lower interest rates. There will be like higher fees if they borrow a higher percentage, and they have to go to financial institutions if their parents are not permanent residents in Australia, but willing to help with the loan as income guarantee.
Who's supposed to see you? In this case, would Mr. Chong Senior or Mr. Chong Junior need to see you, or both of them need to see you?
Basically, both of them would need to see me. So I have to do the long distance verification of identity with Mr. Chong Senior if he's overseas. If both of them are in Australia, that's much easier. I can meet both of them and do face-to-face VOI.
Okay. Can I also ask you, with regard to financial institutions' preference for financing, would they prefer to finance house and land package, or would they prefer to finance apartments, or is there any difference to begin with?
Yeah, it's also a very good question in this interesting timing, because I'm not sure if our audience have followed up some news in Australia, because especially this year there are many negative comments and news regarding the builders in Australia. There are many like huge builders declare bankruptcy in Australia, and right now, like I can see most financial institutions like mortgage providers in the market have changed their risk analysis, their risk rating. Most of the financial institutions stopped granting house and land package loan, like no construction loans now in the market. Only very few and exclusive lenders are still granting construction loans. So currently, I would say established like second-hand of the plan, brand new properties more, you will have more selections of lenders. All I can say is that.
Great. Mr. Bhaskaran actually raised a very interesting question, which I want to pose to you right now. He actually asks, if I borrow the maximum tenor, can I settle early, and will there be a penalty? And if there is a penalty, would you be able to give an estimate how much it would cost?
Yeah. So I understand this question as if you want to pay off sooner, would there be a penalty? So if you go to financial institutions and apply for a loan, it's always variable rate loan. With a variable rate loan, you can always pay off the loan anytime you want without penalty. So there will be some third-party cost by the government, say mortgage registration cost, and discharge fee will be charged by lender, which is around mortgage registration and deregistration, I believe it's around 1,600 something charged by Victoria. And then for lenders, discharge fee would be around 700 Australian dollars to within $1,000. So, but those are all flat fee. Other things like no other fees. It's pretty easy.
Good to know that the financial institutions doesn't charge a penalty clause for early exit.
Right.
But at the same time, he's also asking, what is the maximum quantum can I borrow? Can you do 95%?
Okay, also very good question. So for financial institutions regarding non-resident loan, the maximum they can do is only 80%, but there will be other limitations depending on the security address, the location, whether it's a high density like high-rise apartment buildings. Some financial institutions do grant a much lower LVR, like 70%, if is located in a high density postcode, or if it's a high-rise building. A high-rise building is actually very easy to achieve. As long as one apartment building has more than 35 units, will be treated as high density building. So I reckon like almost all apartment buildings have more than that. So for some financial institutions, they do grant much lower LVR, but no loans can be granted up to 95% for non-residents.
Similarly, Madam Lim has also asked, if you actually apply for this loan, or someone can foreign borrowers have a fixed rate loan?
Right, I do have many clients asking me the same question as well. Because for financial institutions, most of them just don't have fixed loan product options. Very few of them do have fixed loan product options, but the fixed rate is like sky high. Like it can start from 9%, and so it is designed in a way that making sure nobody would choose them. So I would just put it this way. So yeah, so I reckon like even though some lenders they do have fixed rate product, but most clients would just go for variable rates.
Mr. Yap actually mentioned here, if I take a loan from you, who will service my account? Because will the lender also be you?
There will be a customer service team from different financial institutions. If you are planning to say if you want to top up your loan for some reasons in the future, always come back to me. If just like daily maintenance, saying that you would like to withdraw a lump sum from your offset account, you basically just send an email or call their customer service and they will be able to help you. I'm pretty sure for most financial institutions in Australia that provides non-resident loan, they do have a customer service team that can speak Mandarin or Cantonese. So it's actually quite handy and very easy to reach them.
Okay. I know that the time is running really short, so I'm going to cut it down to one last final question. And I think this is the great final question to actually ask. Do I need to come to Australia to sign all the documents, or can you do everything digitally?
Oh, great. Very good question. Well, I forgot to mention. So you don't need to come to Australia. You don't even need to open a bank account in Australia to complete this loan application. With all financial institutions, they will open a trust. Actually, they will open the offset account on behalf of you, because like when you apply for the loan, you have signed the privacy consent form and also other authorization form to allow them to create an offset account for you. And also, after the loan is approved and you need to sign all the loan documents, some loan documents will be just completed electronically online on the portal. There will be some physical documents you will have to sign. You can print out by yourself, and there will be a very important step called witnessing. So you have to either go to an Australian lawyer in your home country, if you can find one, to complete the witnessing certificate, or you can also visit your home country's Australian embassy to complete the witnessing certificate. So with that certificate, it has to be certified and completed and signed, and the physical copies have to be posted back to Australia to the financial institution's legal practitioner to complete this loan settlement. So that's the only thing, that's the only pickle, but you don't have to physically visit. You don't need to come to Australia to sign all the loan docs unless you want to. Like, I'm happy to meet you.
Well, thank you so much, Monique, for this very, very insightful sharing. I think it is extremely crystal clear that before you do anything, just make sure that you speak to the relevant parties. And one of the key people to speak to is actually someone like you or QA Finance per se, to actually find out how much they can actually borrow. You can't go shopping without knowing how much you can actually borrow. And you definitely don't want to get caught whereby, oops, you either over leverage or you under leverage. So speaking to some professional like you would be superbly important.
Thank you, big time. Yeah, so thank you for having me today, and welcome to reach me, our audience. Welcome to reach me after this webinar. I'm always happy to help. If you are not sure how much you can borrow, if you have no idea at all where to start, always welcome to reach me by email or mobile or WhatsApp. My WhatsApp is also my mobile number as well.
Ladies and gentlemen, thank you so much. And if you have any further questions, or if you think that I didn't get your questions answered to your satisfaction, you can always reach out to me as well, because Monique and I communicate very regularly. I'll be able to field that question to her for a private and direct response as well. So with that, ladies and gentlemen, thank you so much. And do stay tuned for Brunswick Yard. something that's really amazing that's coming up in Brunswick. Thank you. Bye-bye.
Thank you. Bye.
Hi. Hi, thanks so much for tuning in today. And today we're going to be talking about Brunswick Yard. Brunswick Yard is set to change how Brunswick looks and feels. This is a redevelopment on a previously used site for a factory, and this development is actually a very, very low density product. Now, why we are so excited is that this development was designed by award-winning architects, Car Design, landscape beyond par by an award-winning company, 360 Degrees Landscape Architects. It's got 7-star building energy rating, high quality fixtures and fittings, great open floor plans for easy living. It is less than 5.5 kilometers away from the CBD. Construction has commenced, strong developer support, certainty of completion by the end of next year, early 2024. There are incentives for purchasers who intend to use the property as their own stay or even for investors. Now, all units, then this is the beauty, being so close to the Melbourne CBD, all units come with car parks, whether it's a 1-bedroom, 2 or 3 bedrooms. All units come with car parks, and most units even come with storage cages as well. Unrepeatable value, very, very good value, where stamp duty savings are still applicable. Now, Melbourne has been touted to be one of the best cities to live in worldwide, and most of these units already has been sold, 70% in fact, and there's very few units that's still available, so don't wait. Now, this development has a very interesting facade. I'm going to play a very short video for you to watch. Very industrial in terms of clean lines, floor to ceiling windows. They leverage a lot on natural light, and they're playing with a lot of cross ventilation to make sure that all the units are properly ventilated. Now, maintenance is actually kept at the minimum. One of the beautiful parts about this development is that the builders actually made sure that operating and managing such a development will not be cost prohibitive for all owners and investors. It's actually very friendly. So, ladies and gentlemen, I look forward to hearing from you. If you're interested, I'd love to send you a brochure, or if you're in the area, I'd love to take you there to take a look for yourself. Thank you very much for watching.